a nearly 10% increase in its profits in the second quarter, driven by strength in life sciences. Now, the company is actually restructuring to match skills with demand and shifting towards local hiring over H-1B reliance. While the growth remains steady, the real test lies in sustaining margins during the strategic realignment phase. And to discuss this further, we'll be joined by Sushovan Naik, research analyst at Anand Rathi Institutional Equities. But before that, let's quickly listen in to what the management had to say with regards to attrition and what's the process going to look like ahead.
During this quarter, we also added 5,196 freshers. That's more than double the number that we added in the same quarter last year. If you look at the total number of freshers that you've added during this year, AMJ quarter and the JAS quarter, that's 7,180. We started the year with a plan that we will do a significantly higher fresher addition this year compared to last year. So if you look at what you have done during H1, that's almost 92% of what we did in the entire year last year. So we are on track to do what we had planned to do for this year in terms of our fresher additions. Our attrition for this quarter came in at 12.6% voluntary LTM. That's a 20 BPS reduction from last quarter, and it's a 30 BPS reduction from JAS of 24. Given the strong performance that we've had this quarter, we have gone ahead and made a decision to roll out the increments, which will be effective from October.
Okay, so attrition has actually come down. Their top line has been a beat. So that is one big factor, and you're seeing that in some of what the brokerages are saying today. But let me get Sushovan in. Sushovan Naik is research analyst at Anand Rathi Institutional Equities, who tracks this space. Sushovan, very good morning to you. Do you think there's a positive surprise in HCLTech, or was this largely priced in? And also, the reportage of AI revenue separately, how does that help you as an analyst to understand the company better?
Thanks, Tamana. I hope my voice is audible.
Yes, it is.
So, Tamana, the way to look at it is, I think this is the first Indian IT company which has been reporting the advanced AI revenues, to be precise. Now, if you look at what Accenture has been doing now, at least it is going on the path towards Accenture, because if you look at Accenture's FY25 numbers, which ends in August, I believe almost 4% of the revenues is basically AI related revenues, and 7% of their bookings is basically the AI bookings. Now, when you are doing this quantification with advanced AI, you are basically giving an indication to the market that this is what our advanced AI revenues are. And this does not include your table stakes, data and analytics sort of revenues, but actually your agentic AI workflows, right? So this is actually a very positive news as far as Indian IT is concerned. Possibly this is a precursor to a large number of other IT companies doing the same thing from a disclosure standpoint. And if you look at HCL revenues, it has been a beat both as far as revenues are concerned, because I understand the street was almost at 1.4 to 1.5% CC growth. They have actually delivered 2.4%. A beat even on margins. It was expected to be close to 16.5 to 17. They've actually delivered 17.4 to 5% EBIT margins, right? And even if you look at it from a TCV standpoint, I think there also it has been a beat, because almost $2.6 billion is their quarterly TCV, with 9.5 being their net new LTM TCV. So overall, in my view, a very good set of results. And as had been pointed out by one of the folks here, is I think the growth also, if you look at it, it has been a growth which has been all round across all the verticals. But one interesting aspect is also that the healthcare vertical has shown growth to the extent of 4.5% sequentially. Even if you look at TCS, this also has been the same case. I think it was around 3.5% sequential. So possibly this may be an indication that the payer segment, which was under pressure in the US, we may be seeing an inflection point there.